What's up, guys? Welcome back to another video here, taking a look at the markets. First of all, just a real quick look at the new room. Check it out. We got a little theme going on here. I think it looks a lot better than what it did. Let me know what you guys think. If you enjoy the new setting, if you think it looks nice, let me know in the comments. We worked really hard. I moved these desks around like 3,700 times, but we're here now. So let's jump into some charts and talk about current positions I'm in, things I'm watching, and my ideas for tomorrow's CPI report, as well as Thursday's PPI numbers. Let's jump in. Okay, guys, so I'm here on my Webull account, and I'm currently still long gold here. I want to show you my current position. So I am long gold. This is GLD. I trade ETFs because I am unable to trade CFDs as a US regulated brokerage client. I have to trade ETFs or futures, and I just choose ETFs. I find them easy to use. I've always traded with Webull, so it's just where I'm comfortable. I'm currently floating $570. I'm long gold as of the recent pullback to support. We'll take a look at the XAU USD, or the futures variation, in just a moment, which many of you guys might be familiar with. I'm long. I've got my stop loss locked at break even, and I'm looking to see if price can continue higher. Now, there were some things we discussed on the live stream here today that I want to go over when talking about gold. Frank made a really great point. Frank is my trading companion here at A1 Trading. We've been trading together for a number of years, and he made a great point about interest rates and their current impact on the gold market. Check this out.
I think what we need to keep in mind is that price is this high, very close to all-time highs, with interest rates at very high levels in a long time. So the fact that gold is here looking this healthy with really high interest rates, which are, they're pretty much expected to come down from here. I don't think they're going to go higher than 5.5%. I think the cap was probably 5.25%. So we're looking at the end of interest rates hiking at least, and then the future for the Fed is lower and cuts going forward. So looking at a very healthy looking price chart for gold, and then the potential rate cuts in the future, like starting next year or so. Yeah,
Frank, I think that's an exceptional point, because like you said, if you look left on your chart that you have there, both times that we hit those levels previously, rates were much lower. And here we are challenging them yet again with 500 basis points later, right? This is an incredible feat. You have to admit, the price being here at all with rate hikes, which is, usually cause dollar strength and usually cause, the gold market to sort of be less attractive as people go into bonds. It introduces a lot of pressure on the gold market. And yet here we are testing the all-time highs. I think that is a fundamental, point that has to be paid attention to. So great points there. So as you can see, Frank discussed the idea that, of course, interest rates have been climbing very steadily. Despite that, though, we are still very close to the all-time highs. Even looking left, we can see that again in 2020 and 2022, both times when we challenged the all-time high on the price of gold, we had much lower interest rates. Now we see interest rates much higher, and yet gold is still punching up against that upper ceiling, if you will. My opinion is this is a bullish catalyst by itself in gold, but on top of that, we also have a couple other things to consider here. So again, I am long gold as of this recent pullback here. I'm looking for an expansion back to the previous high, but I am actually looking for a breakout going into the coming weeks or months. We'll see if I'm correct about this, but I am trading looking for that possibility. And part of the reason for that is a couple key things. We've talked about this regularly recently. The banking situation has been a big headwind to the markets and has potential to rocket the price of gold off of fears. We also have payroll jobs numbers here in the United States showing some contraction. And when jobs are showing weakness, it has potential to signal some fear in the economy. Some potential cracking on the unemployment rate could cause some concerns an upside for the gold market. And also, we have the debt ceiling situation. We had Janet Yellen discuss this. This has been a hot topic in markets right now. The debt ceiling being lifted by Republicans and Democrats will be very interesting. I think it's probably going to happen. And despite that, it's just going to introduce some fear to the markets. And again, all of these fundamental things are reasons why I think the upside to gold is more attractive than the downside. Now, I mentioned my stop loss is at break even. So if this price comes back into this area, I'm just going to close out. I'm going to wait for a better attempt. Now, another thing I'll watch out for is if we just go ahead and scream through the highs, I'll be looking for any chance of a pullback to get involved and look for an expansion of price. I think we have room all the way up to 2,200 this year. We'll see if I'm correct about that. Now, again, I also want to talk about the dollar. So for the dollar traders out there, the dollar has been a little bit strong here recently. We've seen a little bit of a rebound, but here's what I want to point your attention to when it comes to CPI tomorrow. CPI is, of course, our measurement of consumer-based inflation. And when we talk about this going into tomorrow, the markets will be very, very interested to see if we, in fact, get some cooling in the inflation area or if we stay sticky. Now, notably, when it comes to CPI, you have two things. You have headline CPI, but you also have the core CPI. Now, core CPI eliminates some of the more volatile components like food and energy prices. These oscillate quite a bit, substantially, month to month. So this one being down, this is removing those volatile things. If this comes down, if we see more cooling in the core inflation area, I think that the dollar takes a dive through the lows. That would be my take on this. However, if we see core inflation stay flat, right? If we say, hey, this does not, it remains unchanged, I think the dollar stays strong. So these are my case scenarios. If core inflation comes out, and I'm notably talking about core because, again, it eliminates some of the more volatile things and focuses on the very sticky components, right? And so when I look at this, I'm watching the dollar here for a break either direction. If we get a break back to the upside, this would probably be off of very sticky, stubborn inflation that does not seem to want to go away. Why would this be bullish for the dollar? Well, it would be bullish for the dollar because the Fed would likely keep their rates hiking going, right? We would concede higher rates for longer, that sort of concept. Whereas if we see inflation continue to come down, it's possible that the market will see the Fed sort of pause. And if they pause, I think the dollar continues to lose its steam here. Also, one thing that I mentioned is that there are fears around de-dollarization with the BRICS nations potentially trading outside of the dollar for oil and things like that. There's a lot of things that are built up against the dollar, I would say, right now, and does not look like a super attractive buy, in my personal opinion, at this time. So I'm more on the sell side. I'm looking notably for a break of the lows. Through the lows, I would probably be very interested in trading gold on the long side, right? As a weakening dollar could be beneficial to the price of gold. Now, speaking of gold, I want to show you guys something on the Smart Money Tracker. We're looking at the COT positioning from institutional traders. We see that gold is still very, very much being bought by it's being bought heavily by institutional traders. These are your professional traders, have a very large, long exposure to the gold market. This is yet again another reason why I am bullish on the gold market and looking for opportunities to buy pullbacks. Now, please remember, this is not me giving you advice to do any of this in your own trading account. I'm taking risks. I know the risks that I'm taking, and you should know the same. If you decide to make a trade, that's your decision. And, I think when I talk about that, I talk about that from the sense of, every professional trader that I've had the honor of speaking with, interviewing, discussing with, learning with, I've had a lot of interactions with a lot of great traders. All of them take ownership to their trading. And I think that just that message is really, really important to people who are aspiring in this stuff. Take ownership of your trading. Do not look for other people to give you the answers. These are my opinions. I can be right. I can be wrong. And you should know that. So again, just a little bit of transparency there, I suppose. So when it comes to gold, again, very long percentage wise, I'm still interested there. Also you've got the euro, which has shown really, really big strength in terms of long positions, still 77% long. That's very aggressive there. And something to note for euro bulls, if you're watching the euro dollar, etc., it's kind of an interesting one. But you know, we have several options there. In terms of the euro, we've talked about this recently. I actually prefer it against the Japanese yen, which has a very high short ratio. You can see 77% of contracts tracked are on the short side. So if we look at euro JPY here, what that shows us is that there is a preference from institutional traders on the long side of this trade. So I think that going into the remainder of this week will be very interesting to watch. If you do get pullbacks into levels of support, I'm more oriented towards the buy side. Personally, this could be more of a daily chart setup. This is a little bit longer term, but you have this concept of a possible pullback play, just looking to continue this upward trend that we've seen on the Euro JPY pair. So I kind of like that. In terms of indices, I'll be watching the S&P 500 as well as the NASDAQ going into this week's CPI and PPI numbers. We will have more videos and coverage for PPI as we get closer to Thursday. And by the way, I just want to take a quick second to remind you guys, if you're enjoying my content, make sure to hit the thumbs up button and subscribe. It is very, very helpful to supporting what we're trying to do here. This is free content every day to keep traders informed and up to date. So I want to also say one thing. We are also doing a Bitcoin giveaway. We are giving away $500 in Bitcoin. If you guys are not already entered into our giveaway for Bitcoin, if you made it this far in the video, you're 9 minutes into the video, here's how you can join our Bitcoin giveaway for free. If you want a chance to win, all you have to do is there's a link down below at the top of the description. Click that link. It's going to open up a live chat feature. Click chat now. Click tell me about your discounts, put your name in, put your email in, and it is going to connect you with our support team, and they're going to get you added into the raffle for the $500 given away in Bitcoin. So there you go. There's your free opportunity to win $500 through our live chat feature, which is linked in the description down below. Guys, I hope this video was helpful to you as you go throughout your trading this week. Trade safe, trade smart, and we'll see you back tomorrow. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.